Mr. Raymond here with another financial analysis video. This is going to be episode 21. We're going to be analyzing SGL Carbon. So let's get straight into it. As you can see, over this lifetime, it's declined in value by almost 77%, which of course is really not good. I invested £1 and I received a negative 1% return. The employee amount is almost 5,000. And the market cap 1.06 billion, which is just borderline large cap. Revenue figure is almost the same as that, which is 919 million. Earnings per share is negative like the previous company. Dividend yield and earnings per share are missing, which are two vital key figures. The beta is 35% above the average, which is not the worst, but it would be better if it was closer to the average of 1. As you can see, the past 3 financial years besides the current financial year, the company has reported either negative or very low profit margins, similar to the previous company, and similar to the other company. Also, the balance sheet reports that the debt compared to the assets is incredibly high. So as you can see from this point, it's going to be a horrible investment because all of the interest payments that the company will need to pay would just wipe out all of the profit. So, and considering that the profit is already negative, you would have just lost even more than you would have lost in the first place. So 14% would have to be taken out of the company's value, or it will be taken out of the company's value. So the company is technically lost for almost 15% of its value, based on negative profit margins, and the interest payments will take away more of the company's value because the company hasn't made any profit to be able to pay off the interest payments. So that's just a double negative. Continuing on to the cash flow statement, the company's gained 8.7 million in net change in cash and 10.60 million in the previous year. But in the previous year of 2018, it lost 259 million. So that's completely wiped out. The only way the company will be able to recover from that is if it gained about 230 million or 240 million in the current financial year, which would basically make it a net neutral. But it hasn't released any of its cash flow statements for the current financial year, so we wouldn't know that until it's released that document. So apart from that, in all of the statements, in all of the key financial statements, the cash flow statement, balance sheet, and the income statement, the company's pretty much done poorly. So definitely wouldn't recommend investing in SGL Carbon. But if anyone has any alternative ideas or reasons why it would make a good investment, feel free to put in the comments, and I will see you guys in the next one.